SMC trading strategy that I'm about to share with you could genuinely make you a profitable trader. Step-by-step trading plan on how you can actually execute this trading strategy. Into step number 4. So step number 4 is the trading strategy. Ultimately, the trading strategy is how to get in and out with money. Very, very simple. So to brief, we've just been through the first 3 steps and we're combining them all now into the trading strategy. Now bear with me, because after we've been through this one, I'm going to go and show you how this looks in the live market and show you the exact trade that we took on Friday using this exact system. Okay, let's go. So first things first, the whole lines, right? So the lines that are filled, that represents the 15-minute time frame. The lines that are dashed like this, so these ones here, that represents the 1-minute time frame, right? Okay, let's go through step by step how we just learned. Step number 1 was what? If you said directional bias, you're absolutely correct, right? Step number 1 is our directional bias. And we've already established that we are bullish, right? We are trading from swing low to swing high. That is our trading range. So we're bullish and we're looking for longs. Now let's move on to step number 2, which was what? Identify key areas of liquidity. We had, all of the liquidity in these highs, all of the liquidity in these highs, and the liquidity across these lows right here. So what we wanted to see is a run on this sell side liquidity, which I said to the community members, a run on the sell side, and then wait for price to get into our order block, which takes us on to step number 3, our order block. The area in which we expect there to be a large amount of orders sitting inside of. So step number 1, we're bullish. Step number 2, we identified our liquidity. Step 3, we have our order block that sits right below that liquidity perfectly. And step number 4 is putting it all together. So what we do is when we get our run on liquidity like we expected, when we get into our point of interest, which is our order block on the 15-minute time frame, it's our job then to drop down to the 1-minute time frame and wait for our entry model, which is what I said when I said LTF, confirmation, right? Lower time frame confirmation, which is simply just understanding that if the 15 minutes bullish, but it's coming for a pullback, the 1-minute time frame on the way down is going to be bearish. And it's very simple. So as the 1 minute comes into here, you can see that it's bearish, right? It's putting in, lower lows, lower highs, lower lows. It's bearish, right? But then we get into our order block, and to confirm that this order block is truly what we think it is, where there are lots of money inside of this level, to confirm that, we need to see the shift in real-time price. We need to see the shift from bearish 1 minute to bullish 1 minute. If we get that, that is the final piece of the puzzle, because that tells us that we were correct. There are many, many orders in this order block level, and that is why the buy orders are kicking into the market. And so once we get that, then we just repeat the same thing because it's fractal. We get our change of character, right, which tells us we'll go from bearish to bullish. And then again, we wait for a order block on the lower time frame, like the 5-minute time frame. And then we will take our entry at this level here, right, at this demand zone, wait for price to tap us in, and we'll take our profits at the old liquidity, at this liquidity, and at my favorite 1 to 5 fixed take profit level. So let's go ahead and put all of that together into the actual charts. Let's go. Okay, here we are on the 15-minute time frame, euro dollar. You can see it's Friday, the 24th of May. Let's go ahead and do this. So it looks very plain and very confusing right now, but you will very quickly understand where we're coming from. So from a structural perspective, which is step number 1. Now, by now, if you've been watching my videos, we have specific rules for market structure. If you haven't, after this video, go and check out market structure video. I'll link it down in the description. But before we do that, let's run through it. So step number 1 is understanding our market structure. Well, I know, because I've traded the price action, that this was a swing high, this was a swing low. It meets our pullback criteria, which you will learn in the other market structure videos if you don't already know. And then we go higher high. So step number 1 is, number 1, we're bullish, right? We have a break of structure to the upside. We have a break of structure. This is our swing high, and this is our swing low. So that is our trading range. That's all we're concerned with. We just want to know, where is our structure? Are we trading higher? Are we trading lower? Where are our swing points, right? So we have our swing low, and remember, if you remember correctly, this is our protected low, right? Just as we spoke about when we were in the theory. And then this high right here is our targeted high, right? This right here is our targeted high. That being said, our conclusion is step number one, we are bullish, therefore we're looking to long. Now I'm going to turn on my special indicator. This indicator just tells me pretty much the sessions, right? So the blue box, just like we did in the theory, represents Asia. Now I know that Asia represents a large area of liquidity. So if we're step number one, bullish, step number two is all about identifying liquidity. So what I now need to do is identify all the pockets of liquidity in this level. Well, number one, and the most obvious, is these targeted highs up in here, right? That is a huge portion of external liquidity. The other pockets of liquidity are, if you look closely, right, across all of these lows, you'll see trend lines. These trend lines indicate liquidity because there will be a lot of traders that will be looking at selling this trend line, right? They may be in sells, they may not be in sells, but if they are, their stop losses are going to probably be somewhere up at these highs as well, right? So we have a bunch of trend line liquidity. Again, we have old highs, just random swing highs, right? Any old high or old low. Why are those highs and lows liquidity? It's very simple. It's just a logical area in which looks to be safe from the human mind, right? So where we put our stop losses, where you put your stop losses, and where everybody puts their stop losses all in the same place, we all try to find some sort of logical high or logical low to place our stop loss at that level. Because again, we understand that it is the most sound place to put your stop loss from a logical perspective because it's a swing point, right? So you just understand that at every swing point that sticks out like that, there will be stop losses in there, and they may not only just be stop losses, there may also be orders, right? For example, there may be a bunch of traders looking at this level waiting for a breakout to be able to go long, and then that breakout, it adds liquidity at this level and then adds more liquidity at this stop loss. Again, there's so many different reasons as to why there could be stop losses, as to where there could be liquidity, right? So this is another area of liquidity. You can see across here, we have all of these stacked highs, right? So what we'll do is we'll just pull out this high and go across here. But there's a bunch of stacked highs, which again, people look at that and saying that this is an area of resistance. But not only do we have a bunch of stacked highs, we have relatively equal highs, right? So this high to this high here, they're relatively equal, which means obviously area of liquidity. Not only that, one more, it's Asia session high, and it's currently London session high, right? So this is London right here in green. London is still going on because that's the session that I mainly trade. So London is still going on, but at the moment it's put in a high at this level. So there is so much liquidity in this high and in this high right here. So there is more liquidity. Where else? Asia low, obviously, right? Asia high has it, Asia low has it. But if you just look to the left, you'll see not only do we have Asia low, but we again have relatively equal lows, right? Area of support. Some traders look at it, some traders just look at it as equal lows, right? To a lot of traders, because price pushed out here, come back here, and then pushed out again, this now acts as an area of support, and for some reason we'll just randomly start trading higher, which is fine. Let them believe that, because we understand that we're going to use that liquidity to get into our moves. So that's fine. But that is, again, another area of liquidity. So that completes step number 2, right? I've mapped out all of my different areas of liquidity: trend lines, external highs, internal highs, equal lows, equal highs, Asia high, all of these different types of liquidity, they're all ready. Now, step number 3 is to identify my order block. So I need to look at this price leg right here, and it's, again, very, very simple. It's the final, so this is the sell, right? This is the range, this is the sell to buy, and we want to just literally narrow it down to the final candle and pull it across, right? It's that simple. That is our order block. That is the final point, right? You can very clearly see that before price traded higher, there was an aggressive sell into this order block to trade out. Therefore, this level acts as our order block, right? It's the final sell to buy that broke structure, right? And it leaves behind this, and then price comes back to it and then shoots back off. That is exactly what this level represents in here. So that is step number 3. So to conclude and to kind of, overview. Step number 1, we have our directional bias. We are long because we are bullish, therefore we're looking to long. Step number 2, we have all of our areas of liquidity that we want to target and that we want to see run before we get involved, right? A lot of traders may make the mistake at looking at this right here and London opens and they're like, yeah, we're bullish. Okay, time to long. Hello, you haven't waited for the clear out of the liquidity. And lots of times when London opens with this little push up, everybody's FOMOing in, price is going, and that induces them to get involved. And what does that do? That puts more liquidity at these lows. What we did and what we told our members to do is wait for this liquidity to be taken, wait for price to come into here, look for a lower time frame confirmation, and then long. And so you remember my exact instructions were wait for sell side run on liquidity, which simply means wait for these equal lows to be taken out, then wait for price to get into this order block, and then, and again, this is all step by step, and then wait for the lower time frame entry model, right? Which is, as we know, the 1 minute time frame shifting from bearish to bullish, like we just practiced in theory, and then long into the buy side liquidity. So 1 level of liquidity, 2 levels of liquidity, and 3 levels of liquidity. That's the exact game plan that I give. That's the exact strategy that I've just outlined to you in the theory. Now let's walk through it practically. So let's play price and wait for price to get into this level. So there's the run on liquidity, very aggressive move through all of those stop losses. But not only do we have stop losses, right? We also have many traders that look at this level that's an important level that's now being broken. And what are they doing? They are shorting the market, right? Because they've seen this important level be broken. This resistance is holding, support has been broken. Let's short. Where do you think they're putting their stop losses? Above this support level, or above this other logical high that's extra safety, right? It's all about understanding other traders and their psychology. And then when we get into our order block, when we've had a run on liquidity, when everybody else thinks that price is going down, that is when we look at buying, because that's exactly what smart money do. If 95% of traders have to lose money, we better not do what everybody else is doing. It's that simple, right? Don't follow the herd. So that's why you have to get comfortable in buying whilst price is trading lower. So when we get into this region, what do? Do you remember? Exactly, drop to the 1 minute time frame. So here we are on the 1 minute time frame now, and all we've done is zoomed in, right? Nothing's changed. We still have the same bias. Price is still going to do the same thing. All we've done is just zoomed in. So if you look at the 1 minute right now, if you're just saying theory, price was bearish, and then it was bullish, and then it was bearish, and then we had a pullback and a lower low, right? So you can easily quite see right here that on the 1 minute time frame, EU is bearish coming into our zone, right? It's very, very clear to see. So as it stands right now, we have swing high and we have swing low. So we just wait at this point. All we need to see is a run of this high. If this high gets broken, then that is our confirmation, because sellers come in, buyers take out the sellers. Therefore, price is likely to go up because we're reacting from our order block. We're just waiting now to confirm that what we thought about this level is true. That is why confirmation is so important. So let's play price and see what happens. Okay, so we've liquidated the lows, right? Let's keep playing out what happens. Okay, so now we've broken the lows. Fine, no problem. Like, price can go all the way down to right down here if it needs to. It doesn't matter. We're not bothered. All we're doing is waiting for a confirmation. So now we've gone from high to lower low to lower high to maybe lower low. So right now what we would need to see is this high be broken, right? We just keep following it. And again, we just keep following it. Keep following it. We're still inside of our level, right? We are in no rush to do anything. We simply just want to keep following price to see what price will do, right? If price doesn't give us what we need, then fine, we don't act. What happens? One more run. So now we have lower low, lower high, lower low, lower high, and currently lower low. So again, we just move our swing high. Now, if we want to get this level confirmed, it would need to break this high. So this high becomes invalid, right? It's literally that simple. Okay, so that's just a liquidation. Keep playing price. Okay, so now you have it. Price has officially been changed character. We've had lower low, lower high, and lower low, right? So there is our change of character. So now what we need to do is we've confirmed that this is the level, right? We've confirmed that we're ready to long from here. We've now confirmed it with our lower time frame shift in structure, right? We've gone from lower lows to higher high, which tells us that this area is confirmed. Price is ready to go higher. Now we need to find an area of interest that we can look at taking the trade from, right? So what I do typically is go to the 5-minute time frame to try to identify an order block, right? An area of interest. And what I will always do is, where was the most recent liquidation, right? So we can see here that we had a low, price pushed up, then sold off and liquidated this low. That's a liquidation, right? And then I want to identify, well, what caused that? So we see price pushed up and then we sold, right? So sellers came in, sell orders came in, liquidated the low, and then this is where the momentum came from. The momentum comes from this candle right here, and then it doesn't stop. Therefore, that is literally our order block. That is the area in price which price will come back to, or potentially come back to, mitigate and then continue. It's the exact same concept as this, just in a more refined, zoomed in and fractalized perspective. So what would I do? That is our time to long, right? We're gonna put our entry on here. We're gonna put our entry on here. We're gonna put our stops just a little bit below, right? Give you a little bit of room to breathe. And where do we target? Right, so for me, always take profit number 1 is fixed at 5 risk to reward. So I go right here up to 5 risk to reward. That is every $1,000 that I risk, I gain $5,000. My second take profit, I want to just go for the liquidity, right? I want to look at the liquidity, right? It can be this high or it can be this high. I just want to see some sort of liquidity to get taken out, right? So we're going to take out this liquidity in here. And then finally, I will leave a small amount of the position on to take this high, right? Because overall, we're expecting from a 15-minute time frame, if we zoom out for a second, right? All we're expecting is that price is bullish. We're going to make a higher low and then a higher high, right? That's literally it. It's just trading the 15-minute structure along with some other confluences and understandings. So notice as well, what do we have? We have a bunch of trendline liquidity ready to be taken out, which is awesome. So let's play price, and there you can see that we are tagged into the position, right? So the position's open, position comes a little bit deeper, make sure that we get tagged all right. Price hovers around the level, and then once we break this level, you can look at moving your stop loss to break even, and then just waiting for the rest of the trade to play out. So we've got a 5-minute time frame just so that we can see how this trade plays out a little bit faster. We have take profit level number 1, we have take profit level number 2, and we have final take profit level number 3 up there. So pretty quickly, our first take profit of 5 risk to reward gets smashed. So $1,000 turns to $5,000. That gets smashed, and we're going to take off half of our position. TP2 gets hit very quickly after, because you have to understand that price is like a magnet towards liquidity. It just wants to go to where is all the liquidity, right? So take profit number 2, which is a 1 to 8. That's where I'll close the majority of the position now, and then I'll leave a little bit running all the way up here for these highs up in here. So now we've come to the live market. You can see that there is a small amount of this position still running, and this is how it looks right now, right? So price is coming back down, but I am looking to potentially long again. But majority of my position is closed here, majority of my position closed here, and a little bit of the position running up to these highs. Now, if you found value in that video, don't forget to like, subscribe, comment down below what video you want to see next, and check the links in the description for some exclusive content.